next part of the technical analysis. In this, we will be studying about the candlesticks, that is support and pattern. In candlestick, we will be studying about the support and pattern. So, all of you might have seen the graph, right? Graphs generally move up and down. So, there will be a up, there will be a down, there will be a up, there will be a down. You might have seen that. Even in the candlestick pattern, there will be a red candle, a little bit green. That movement keeps happening in the stock market. It is obvious that there will be an up and down movement. And now, because of this up and down, we can form imaginary line touching the lowest of all the points. There will be common points, right? If there are candles moving like this up and down, there will obviously be a line which you can draw, imaginary line, which is touching all the lows and highs, all the highs. So what I mean to tell you is, let me show you in the form of this graph. So this up and down movement will be there, right? You can see here there is an up and down movement. Now here you can see, if I draw a line here, I can draw an imaginary line here. If I draw an imaginary line, it will be touching all the lows. See, it will be touching the lowest point here. So that is called as a support. Now for example, this graph which is moving up, I can draw a line like this. See, you can see the graph is going up. So this lowest points keep going up. That is called the support. Now, why it is called the support? Because when the graph starts to fall down, that line acts as a support. It makes the graph go up. It doesn't let it go below that line. So this line, it can be straight. The line might be like this. The line might be any direction. It can be upward, it can be going down, or it can be flat, horizontal line. That doesn't matter. But in case of support, so this is called the support, the lowest line. If you draw the line low, touching the lows of the graph, or I can draw it like this. See, it will be touching three low points here. So that is called the support. So the graph moves, it touches the support. As soon as the graph touches the support, it's expected to go up. So you can place support as a buying decision. You can make your buying decision based on the support. If the graph or the candlestick touches the support, it's expected to go up. So you can place your buy order at the support when the candle touches the support. And if you expect it to move between the support and the resistance, if the company is performing stable, if the stock market is stable, then you can consider that as a good buying decision. And resistance is the topmost line. See, you can see the support here, right? See, this line is touching so many candles, the lowest point of so many candles. So this graph moves up and down. So the line is touching the lowest of all the candles, and from this point, as soon as the graph touches the point, it starts to go up. So that is called the support. You can see, right? See, so this line is an imaginary line which is drawn by us. We have imagined this line. The graphs are like this, right? You have to take common points. You have to draw a line touching the common points, the lower. I cannot touch the line here, but I can definitely touch the line to so many, the maximum points that it is possible to cover, that you can draw by a line. The maximum points that can be touched is called the support line. You will be drawing like this line and you can buy. So next, see, for example, the company is moving here, right? So next, when it touches here, you can buy the company. You can buy the shares for intraday trading. So support and resistance is one of the best ways of buying. So this is, I have told you about the support. Let me also tell you about the resistance. So this is the support. See, this is a horizontal support. Here what happens, as soon as the company touches here, there is an upward movement. Because as I told you, the company prices are based on the demand and supply. So obviously, this support and resistance are formed because of the psychology of human being. So what is the psychology of human being? Generally, all of us, when the company starts to fall down, if the price of the share is going down, definitely the people will think that I have to buy. So people will start buying at this point. Then the company will go up because a lot of people are buying it, right? So the demand is increasing. So the company goes up. Again, what happens? Fear. Fear comes in. People get scared that the company has gone high, now it might start to fall. So they start selling. So because of the selling, again the company starts to go down. Again, when it comes here, again greed plays a role. People feel that I can buy a lot of shares and make money, so they start buying. So this keeps happening. When the companies are falling down, people may think that the price is, it's the best price to buy the company. And because of lot of buying, everybody starts to buy, the price goes up. Then again it starts to fall because of the fear. People start to sell. Again it goes. So that's why there is this up and down moment. It is because of psychology of the people. People generally think that I need to buy the company. Once the price starts to go up, people start selling. They don't hold the position. So because of that, there is a movement up and down. So this is called the support line. So in this support line, the graph starts to go up. As soon as the graph touches the support line, it starts to go up. So you could have bought here, you could have bought the company here, you could have bought the company here. See, you knew the support for these 3 points. So once the company came here, you could have bought it. Then it started to move up. You could have made so much profit. You can easily make this much amount as a profit. So support is one of the best ways to decide when to buy the company. And resistance. Resistance can be taken as a stop loss, or it can be made as a selling decision. When the company touches, see, this is the resistance. I haven't shown you the resistance line. If I draw an imaginary line here, see, it's going to touch multiple points. It's going to touch this point, this point, this point, this point. So this is the resistance. So as soon as the company comes here, it starts to fall. Again it goes, again it starts to fall. Resistance means it is resisting the price to move greater than that. Support, it is supporting the price. It's supporting the price from falling down and making it go up. And resistance is the last, company doesn't cross the resistance. It is resisting the price from going greater than that, because obviously people will think that the company is already performing very good, or the price has gone very high, so they will start selling. So that is creating a resistance, that is called the resistance. So here you could have seen this line that I have shown here is the resistance. See, you can see it is touching the 2 points, two biggest common points. So, and again it's touching here. This is also the same graph. So it is touching here. So this is the resistance. After this point, the company starts to fall down. So resistance is a imaginary line after which the graph starts to fall down. So you can make a buying decision in intraday trading based on support and resistance. So that is a very good way of making your shares. And again, rather than using so many indicators, most of the people rely only on support and resistance to take their trades. So next time if you're trading, make sure you look for support and resistance. Try to find a support in the graph. Try to draw an imaginary line, or imagine a line touching the common points on the bottom. That is called the support. Next time when you're placing a buy order, make sure when that touches the imaginary support, you can buy. So the supports can be horizontal, it can be bullish, or it can be bearish. The supports can be any way. It can be straight horizontal, it can be upward, or it can be downward. So that is not a matter. And even the resistance can be straight, upward, downward, any direction. Now just make sure that you buy. You buy the shares when it touches the support, and sell the shares when it touches the resistance. So this support and resistance is one of the best ways, and I have used it multiple times, the support and resistance. So I always generally, after I look for other indicators or the patterns, you can also look for support and resistance. Support and resistance can make you a lot of money based on that small movements. So always the company will move between the support and resistance. Generally, if the condition, if you are lucky enough, if you are lucky, the company will be moving between the support and resistance. So you can make a profit of that gap. So the support is here, the resistance is here. So you can make this difference as your profit. The difference between the support and the resistance can be used as your profit. And after reaching to this extent so far, you have followed me so far, I think now you might have been very much interested, and you really appreciate the advantages of the share market, how it can be useful, and how it can help you to make a good income. So if you want to join me, and if you want to start, then definitely open a demat account from the description, and then you can also join my Telegram channel, which I have given in the description. Just click on the link and you can join my Telegram channel, and also a subscribe to the channel would be admirable. Thank you very much.